Hello and welcome to Ask Slim Live. It's August 8th, 2025. This is a trade planning event with Slim's analyst team. It's Matt, Arvi, and Katie. Welcome, everyone. This is our upcoming Market Week live event schedule. Today's August 8th. We have a trade planning live event. Next week, Friday, we'll be doing a Market Week live event with Slim and the analyst team. August 22nd, we'll have a recorded Market Week video from Slim. And the 28th, there will be a market brief recording. The 29th, there's no Market Week or live event, but you can always connect with us on Discord or via email. And you can always check out our content events calendar right on your member dashboard. As we always have to share all the information on all of our platforms, including AskSlim.com or on social media or on Discord, is for informational and educational purposes only and should not be construed as investment or trading advice. Today's hosts, you have myself, I'm Matt, we have Arvi, and we have Katie from the Ask Slim analyst team. The three of us bring you over 50 years of combined experience as market participants, technicians, and active traders, including Slim. That brings it to over 100 years. So we try to maximize all of our experience and share that with you the best we can. Your success is our success. Oh, if you want to learn more about us, you can go to AskSlim.com, and there is a section called About Ask Slim. You can meet the team. There are a number of video interviews that we've done with each other and with Slim, so that's a great way to learn more about us, and there's also just a section about the team. All right, today's agenda, as we announced in the email, we're going to step through our member Q&A, so this is an opportunity for our premium members to submit live symbols or prior to the event, let us know of symbols that they're interested in having us review. We utilize the Ask Slim methodology. We'll apply the cycle analysis, momentum studies, fib, swing high, low techniques. That'll give you technical evidence that you can use then for trade planning purposes. We have a level 4 special that's running. I'll briefly run through those details. And then we're going to do a segment on translating technical analysis into option strategy selection. I'll take a look at the near-term and short-term technical outlook for IWM. And Katie's going to illustrate how to leverage that into technical insights, leverage those technical insights when selecting various option strategies. Okay, so we're going to get started with some chart requests in terms of symbols that our members might be posting. So this is your opportunity right now to share if you do have any symbols you're interested in having us cover. We'll do that. Feel free to put that into the chat or into the Q&A. Well, it looks like we've got GA. And someone wants us to take a look at QQQ.
I think GA is good afternoon.
Yeah, good afternoon.
Okay.
Good afternoon,
Good afternoon,
team.
Bruce.
Good afternoon, Bruce.
All right, so there was a question about QQQ. Claude, what time frame are you interested in having us evaluate? If you could just post that into the Q&A, that'd be great.
Near term to short term.
There was there also was, I had received a message, and you actually were showing it earlier, PLTR. So maybe if you want to, pulling that one up, because that's an interesting one.
Yeah, that's interesting. And this is probably going to be a good demonstration of how we kind of do these things.
Yeah, why don't you go ahead with that one? And
okay, let me share my screen.
Maybe I'll take a look at QQQ, and maybe me and you and Arvi can chat about that one a little bit.
All right, let me share my screen. All right, this is Palantir, and we have been tracking this cycle, which is how many bars in length? 17 bars on the weekly chart. So as you can see, we are just 1 week inside of this timing window, and we've gotten a very strong move up towards this 200% extension level off of this short cycle right here. So these supports keep rising, and this shows no sign of stopping, even though we are inside of the timing window. We've got very positive momentum. So if we get some kind of a pullback in here, I wouldn't expect it to be very much, just maybe a blip to the downside and then back up again. Also over on the daily chart, we've just begun a new rising phase. This cycle is 20 bars in length, and we're making a move up through the 100% extension up towards the 127.2. Momentum is still positive, and this just keeps skipping higher. So these, I would have to raise these support zones as well. We have this daily cycle timing window coming up 8:25 through 9:3. So if this one breaks through this 127.2, then I'll have to put the 161 in there and just keep watching it going higher and higher. Because of this, this is not typical. This would be an in-sync cycle, meaning that this timing window right here, which as I said is 8:25 to 9:3, fits inside this weekly cycle timing window. So I have this pointed out to the week of 9/1 for the decline. But this price action is really not typical for what would be considered an in-sync cycle. Those normally show at least, a little bit flat to some weakness. This is showing very strong. Because of that, I have been looking at the possibility that this was our intermediate cycle low. So I was just looking at this before the live event started. Oops, that's a monthly. And what I came up with as a possibility is this as a possible weekly cycle, 24 bars in length with minor half cycles that are fairly clear. So that lines up pretty well for the past few cycles, and then it starts to skew off a little bit. You've got a low way in here. So I'm watching this daily cycle to see if we are going to get, excuse me, I keep flipping around, but to see if we are going to get any kind of weakness showing up in here. Otherwise, I'm going to consult with RV and see if we need to adopt something else in here. And in that case, we would put in our, our levels. We would go through and put in the support levels here like so, and do the measurements, and also like a draw with the extension tool to see how far we might be able to expect for this to go. See, if that is the minor half cycle, then we're already approaching this 78.6% fib up here, and you've got the 100 up here at 210. So that's a kind of an interesting chart, really is showing no signs of stopping whatsoever.
Yeah, it's very interesting.
I'll hand it back off to you, Matt.
Okay, very good. Looks like someone asked for Merc. Do either of you have any analysis on that one?
Let me take a look. Actually, haven't looked at Merck in a long time.
Sure.
Stock has been in a really bad downtrend for a long time. I have something that's somewhat updated. If you just give me 5 minutes, I can get it a little bit more updated
Yeah.
here.
Do you want me to look at QQQ first?
Sure, please.
Okay. All right, I'm going to share my screen. There was a question that came up, and I'll repeat it here. So the question was about QQQ. It's super extended, but is showing no signs of retracing. Please review near term and short term. So near term and short term. So we look at multiple time frames and we define those. When it comes to near term, it's the next, let's say 1 to 5 trading sessions or around that. And then from short term perspective, it's the next 1 to 3 weeks. So the first thing we want to do is understand our directional bias. And when I look at from a near-term perspective, I want to look at my daily, my 2-hour, and my 15-minute, where the 2-hour is going to be what is going to help me assess the directional bias. And then also as in a complementary fashion, I'm going to look also at the daily. So as you look at the 2 hour, just real quick, at a quick glance, there's some things that stand out, and we have indicators on here in the lower panel here that also help with understanding the directional bias. So first is just pure pattern structure and trend recognition. And you can see here that we had a key minor low that formed. If I look at the daily chart, I always overlay minor cycles just to help give me additional context. And there was a clear low that formed here. We used the 2 hour reversal scout to help signal the likelihood of a low pending. And so we had that happen. And then we get this new rising phase that has occurred. And it's, as the member indicated, it's showing no signs of stopping. So what I want to do is do a few fib draws to get a sense of, where are we relative to these key levels where traders who are either long or looking at possibly trying to time a peak look to get short. So I'm going to do several draws here. Okay, so right now, obviously, you have the prior peak right here. So it looks like that first area for me that would be of some significance in the near term would be near that peak and then around 576 to see if it would start to back off some. But unless it damages this overall pattern structure, and the first warning sign of that would be breaking, what would this be? Yesterday's, this low here that happened yesterday, around 12:30 Central Time. Then the next target is going to be up near 578 to 579. So that would be the sweet spot of this pattern in terms of a potential pause point, consolidation, maybe a pullback. So that would be the first area for me to watch beyond this 78.6, which it could get up there and start to consolidate some. But again, as long as it doesn't violate the minor swing low or near-term swing low from yesterday, I think that those upside targets are in play right now, given the overall momentum and pattern structures, because today the reversal scout on the daily has reversed back to positive, signaling that this is a key low. And again, what are we doing here? We're putting together the puzzle pieces in terms of the technical evidence to help us give an assessment to the overall directional bias. Once you have a directional bias assessed, you have your key levels assessed, you can then get a sense of what's the move. And right now, based on momentum, the move that is underway is to the upside with these as the potential targets. As I look down below, just real quick here to give us a sense of things, why we have these other indicators on there, I'm going to specifically point out on the 2 hour chart our slim ribbon PO, and then also the MCI. So the MCI, even though it's on the 2 hour chart, just the way that the Thinkorswim platform operates in terms of whatever your shortest duration time frame is when you build out an indicator, that's where it appears on the chart. Anyways, so this is a great proprietary indicator that Slim built many years ago that still provides us with tremendous value when it comes to directional bias. It's a multiple time frame indicator, and when it's above 25, it's bullish. As it gets above 50, it gets more bullish, above 75 even more, saying that all of these various time frames are in alignment. Right now it's at 90. So the highest reading it can get is 100, and right now it's running at 90. So that suggests that currently there's still strong overall conditions happening in multiple time frames. And then the slim ribbon PO. I'm going to remove these fibs for a second here because there's some more context that's really helpful. One of those is the slim ribbon itself. So that's why this indicator provides so much nuance in overall value, is because not only does it help you with a directional condition when it comes to momentum trend, it also, because of its essential makeup, which is 3 exponential moving averages, the 8, the 13, and the 21, it can serve as support and resistance depending on the trend, momentum trend. So we have a positive momentum trend. As it pulls back, you can see it hugs that 13 EMA, and then it bounces off. Watching for confirmation using these other two indicators that we have, The first would be the slim ribbon PO. The buyers were so eager that normally you get down into an oversold reading around the 25 and then it reverses and you'll see an arrow. But in this case, the buyers were that eager where couldn't even get down into the oversold, and that started to turn. So this could be a signal then of that continuation, giving you an opportunity. Now, if I move over to the 15-minute, you'll see that the reversal scout turned before. That's why we call it the reversal scout. Yesterday afternoon, prior to the close, that went back positive. Also, the SMI, which is the most sensitive indicator that we use, stochastic momentum index, you can see here shifted right around 230, 245 Central Standard, with the reversal scout around right around the close. So you can see how those all come together. And as you're going through your decision-making process, you need to have certain signals that tell you the trade is a go. Once you've determined your directional bias, your position bias, your position sizing, the instruments you're going to trade, the strategy, you need to have something that says, all right, it's time to execute. And when you pull it all together, it can help you also determine your position sizing. So that's a look at that near term. In the short term, this looks like we had a minor low that formed. This is consistent with what you normally have in very strong trending stocks as you get right-hand translation. So this would have been nearly perfectly at the center, which gave us a peak right on time as it hit a major fib confluence, pulled back, tested the prior cycle low, and then it was so strong that the slim ribbon never went negative, and then you had a new continuation signal. The OBI, which is another directional bias indicator, very helpful for options and option decisions in terms of bias, stayed P3, which is positive this whole way through. So from a broader perspective, you could see that these indicators were still suggesting a positive bias. The weekly structure is positive, the weekly momentum positive. So even though we got this warning, you have to take that in the context of the bigger picture. And then how quickly did the conditions shift? So you always want to see if there's staying power. In this case here, there wasn't any staying power. The following day, we had a new higher high, very powerful bull bar, a candle and bar, and away we go, back up, retesting. So from the short-term perspective, those levels I mentioned in the near term, but if I look at some other swing analysis here, I'm just going to go up to this peak, come down to where our low was. You can see we tagged the 61.8. That caused a reaction. So my next target on the upside is that 580.32 from the daily, off of the daily chart. That's what I have right now. And back to you, RV.
All right, awesome, Matt. Great job. Let's go ahead and hop over to Mark. I think this is an interesting chart.
Cool.
Okay, so on the intermediate term here for MRK, what we're looking at. Let me just get my cursor out here while we're chatting.
All right.
And you can see that we have these series of lower highs and lower lows, right? Right there. And then we got into that new, move up, failed right around that 85 to 89 area, but has not yet actually formed any kind of clear high as of yet. So what we would be looking for is a little move back up, then watch to see if this can curl down after that, as that trough is due later in the year. If we hop over here into the short term, this is where it gets very interesting. Very clean cycles you can see right there. And there's a trough that's due really right about now. No obvious low just yet, right? But we'll be watching for this to curl back to the upside, move over this level right here, and then move over the 78.6. If that can happen, that would say that this was the low here, and we'd be looking for a move then through this old high. And then higher after that, possibly. We'll have to see. But this is the overall look as of now in MRK, Matt.
Okay, RV, let's just jump back to that weekly, because I would say that you specialize in trying to identify, solid bases that might be forming.
Mm-hmm.
So what would you want to see on the weekly to give you some confidence that, because this member asked from a more of a longer term perspective,
right?
What would you want to see there that would give you some confidence that we're starting to see this maybe shift in terms of a bigger opportunity on the long side?
So what you really want to look for is action like this, right?
Okay.
This actually took years to form, but we
Wow.
highlighted it when it happened, just prior to that move, as it was setting up. We highlighted this, and these take years to form, but you can see you got to move in a name like this, which doesn't move much from 95 to 135, off of that multi-year base, right?
Right.
So like right now, obviously we aren't anywhere near that point, right? So
Okay.
what we need to see is at least a little bit of a low that formed like that, a little higher low, let's just say, that would form here at least. And then if
Okay.
that can happen, then that could set up higher beyond that, right? But
Sure.
right now, this is not in a good state.
Patience.
So
So it's
yeah,
patience.
patience, 100%. Yep.
Okay. Or if you are looking at it, then again, this isn't advice in terms of telling you what to do or not to do, but from a trade planning perspective, and when you look at this, RV, it would say smaller position sizing if you're going to test the
Yep.
waters with something,
If
right?
anything. Yep. Yep.
Okay.
Yep.
All
You
right.
can
Very
see
good.
this. Actually, one
Yep.
thing you want to highlight here,
Okay.
a little bit of a higher low,
Mm,
is possibly forming here. So this is usually how this would happen, right? You saw that low on earnings, then it actually held the low, put in a little higher low, and is now starting to
good
curl
call.
up. So you should certainly be keeping your eyes on this one.
So as a more shorter term trader, this setup that we're looking at right here, this technical setup, RV, could be more of a higher confidence opportunity rather than the bigger picture weekly
Yeah,
one, right? Because that's not showing that shape yet.
that's right. That's right.
All
Yep.
right, very,
True.
very good.
True. Mhm.
Okay. Okay. I think that we covered a lot with those few symbols. So we're going to look to move on to the next segment. If there are any other, comments or questions that come up as we go, feel free to put them into our Q&A and we'll try to get to them during the show. Otherwise, we'll try to catch up with our members via Discord after the show. All right, so next up here, I'm going to do a brief review of our services and the level 4 special offer. So let me just share my screen again. All right, so up on my screen, you should see the homepage of Ask Slim. And as we've talked about before, but if you are brand new, we offer technical analysis services and we develop trade planning tools. We have several membership levels here at Ask Slim. They range from a level 1 to level 4, which is our core memberships. And then we have a standalone day trader service that we offer. And as you go from one level to the next in terms of increasing your membership level, that's going to give you an opportunity to expand your the coverage that we have with the symbols that we review. So we'll go beyond the major indexes, which are the primary focus of the level 1. Then with level 2, you get to see our static charts on all of our focus list symbols. Plus, you get to have access to our video collection, our trader video collection, and a number of other tools inside of level 2. But then when you get into level 3 and level 4, that's when you really start expanding into our trade planning tools, such as the MCM, the ranking system. And then in level 4, which is where we have a special going on right now, that's when you get access to our charts. So the charts that we're showing you as we go through this live trade planning event are the same charts, types of charts, same indicators that you get to have access to as a level 4 member that you can import onto your own Thinkorswim platform. Now, that's the platform we currently use because it's most compatible with the type of analysis that we do and the ability for us to share our analysis from an educational perspective with our members that then allows you to take that and utilize it for your own trade planning and trade execution environments and process. With that level 4 special, I'm just going to jump over here real quick. And it is right now, we're in the final week of that, and it's 35% off. It's a quarterly special, so you get 3 months. So if you are either a current member, let's say free through level 3, or you're new to Ask Slim, level 4 is going to give you basically everything that we have available outside the day trader platform or day trader service. It's 35% off, $303.75. It would recur. But you can cancel at any time, even after the first couple of weeks. If you felt that it wasn't something you're going to use, you would you would be committed to that 3 months, but you would not be rebilled. Obviously we have our own bias towards why this is a great opportunity, but this is really a game changer, level 4. And, I don't really say that very often because I'm not trying to sell, and I'm trying to explain that you have the research, the R&D that this team has done, Slim, from, the 70s to when Arvi, myself, Katie, we all joined the team and continue to enhance and evolve what we do here. It's just decades of experience that you get to benefit from. So these trade setup grids, like this one that I have in front of you, this is what you will get to get your hands on and get to utilize. And when we make updates to these charts on a regular basis, you get to have those and you get to bring them into your own Thinkorswim platform. And the really cool thing is it's not specific to one symbol. Even though we cover 85 symbols as our core focus list, when you become a level 4 member and you have access to these charts and these indicators, you can then apply them to any indicator that you want, or I'm sorry, any symbol that you would want. So whether you look at just the indexes or you look at, 1,000, you have a universe of 1,000 symbols, you can apply these indicators in the charts to those. Okay, that's everything I wanted to cover with level 4. If you do have any questions, you can put it into the Q&A, or you can reach out to me at matt@askslim.com. And what do we have up next is we're going to take a look at translating technical analysis into option strategy selection. So Katie's going to demonstrate how to leverage the technical analysis that I'm going to share into strategy selection. So we're going to look at IWM, and I'm going to review the analysis on that. And first I'm going to start with the weekly chart. Even though my outlook period is more focused on the short term, next 2 to 3 weeks, I'm going to look at the weekly because, again, it gives me that, it's either going to give me more confidence in my directional and position bias, or it might negate it altogether, or it would give me less confidence, and that would mean then my position sizing for the short-term outlook would be smaller. So we use the longer duration time frame to support or negate the shorter duration outlook concepts. All right, so we're going to look at this weekly. And what I want to focus on here is we had this cycle here, which ends up translating in a negative way. Cycle structure shift negative off of the initial tariff panic low that formed. And then we have an extremely strong rally, an advance. Now, this advance is important because the price action now is suggesting that this negative cycle structure, this major pattern, has been neutralized because we've seen a weekly close above the major 61.8. So if I draw from the peak that we have up here that occurred in the November-December timeframe of 2024 down to the April low, you'll see here in gold here, the 61.8 off of this major swing. So we've had several closes above that. This week will be another one if it can hold, which it should. It's got a few hours yet to go, but if we hold above, there'll be another close above. That suggests that we've neutralized this negative pattern. So that's what we have there. And we can see the reversal scout still positive, is starting to roll over. And we have some key levels here then on the downside. And that is we have an intermediate minor 61.8 right here. So it came down and it tagged that, and it got a little bit further below that, and then it bounced off of that. That's why it's really important when you're looking bigger picture, while we've really, we focus on a close below for specific time frames. When we're looking at the weekly chart, we want to see the close below on a weekly basis to really suggest whether the bulls or the bears are staking a claim on that conviction. And we didn't get that close below at that last week. And so that said, okay, we still have some bullish opportunity left in it. And we're in a rising phase on this minor cycle still, but peaking. So right now, it's pretty much stuck between this major 78.6 and then it has a minor 78.6. Okay, so it's got a little ping pong action that could go on here for some period of time. But overall, it's starting to shape up more positive, especially on the intermediate minor time frame here, where we put this minor cycle in place, minor low, and when we made that low, it quickly got above the prior peak. So overall, right now, minor cycle positive, the major is neutral, and we have slightly positive momentum. So that says to me I want to be looking more slightly bullish, but knowing that I have some key supports and resistance below and above. All right, we'll move over to the daily, and I'll jump through the rest of this a little faster. So on the daily chart here, we've overlaid the MDY cycle, and that really gives you a bigger picture perspective. And right now, even though we had this meaningful drop, and it did take out the minor cycle low, this overall pattern structure is still positive. So if I draw this, you can see we came through the 61.8, but we didn't close below it, and we rallied up, and we're sort of stuck in this minor resistance zone here. And then there's these key resistances up above. So as I evaluate all of this, my overall directional bias is slightly bullish to neutral. My position bias when I think about my option strategies is going to be similar, slightly bullish to neutral. So this is what I've asked Katie to take into consideration. I've provided her with some key levels in terms of the supports, the upside targets, and now I'd like her to step through how she translates that technical evidence into option strategy decisions.
Okay, let me share my screen. We're going to be using the Tasty Trade platform, and
All right,
just
great.
let me know when you can see that.
Yep, it's up.
Okay, great. So the first one we're going to talk about, since his directional bias is neutral to bullish, is an iron condor. And we're going to use 21 days out. I'll talk about why we're going to use that one in just a moment. But an iron condor is the sale of an out of the money put spread and an out of the money call spread. It's defined risk, it's short premium, and it's typically a neutral strategy, but you can skew it to make it more directional. And we do that by placing one of the spreads closer to at the money than the other one. Now, it's
Very
more
interesting.
typical to place short premium strategies such as the iron condor in high implied volatility situations because they benefit from a vol contraction. So here's our IV rank right here, 17.2, and in this expiration cycle, implied volatility of 24.6. So that's not really high, but we're going to go ahead and set up our trade, and then we will talk about what can happen. So our direction is neutral to bullish over 14 to 21 days. We're using the 21-day expiration cycle for this because the options are going to have more value than 14 days to expiration. And since we are selling the iron condor, we want to sell something that has more value. So to skew this bullish, we want to put our short put spread, which is the bullish component, we want to put that closer to at the money than the short call spread. And I'm actually going to place it directly at the money. And let's go about $10 wide just to give us some profit potential. And then for our short call spread, the price target was right around 230. So let's sell the 230, and let's also make it $10 wide so that part is symmetrical. And this is going to be our iron condor. And let me pull over this, oops, and spread this out a little bit so you can see it better. All right, so you can see that this is neutral to bullish. Now, the benefits of the iron condor are that it does not use that much capital. It's using about $600 of buying power in my account. Also, another benefit you'll notice is we're collecting almost $4. That is giving us some room to the downside here, which covers Matt's position management price. He had mentioned 218.50 as a point where you would start to look at this position. So you are still in the profit zone at that price level. Now, The downside of this is that because there's a lot of extrinsic value in here, you need theta decay. So if you get your move right away, you're not going to be able to take much profit. Look at this orange line here. That is showing kind of the profit potential for today. If the price were to move up suddenly like to 225, you'd only get, 17 bucks if all of the other things remained equal. If I go to the analysis tab, watch that orange line as I click through the calendar, and you can see that as time goes on, your profit potential gets higher and higher until you're at the day of expiration. So that's one aspect. Also, because there is a low implied volatility here, if you get a vol expansion, that is going to hurt your profit potential even if you get a correct move. So let's pretend that it's next week, Friday, and you've got just a little bit of profit potential here. But then let's go down here and let's click up the implied volatility, and you can see how it gets lower and lower. So as the implied volatility goes up, your profit potential will go down.
Katie, I have a quick question with that.
Yep.
That a member had asked. The overall profit opportunity, doesn't change though. So does it
No,
throughout the
your
course?
max profit, this is profit potential. This
Mhm.
green area here is showing your
Right.
profit potential at expiration.
R-
The orange line, it doesn't, it's kind of skewed right now. It's even
Sure.
below. It's not going to, if you get a correct directional move, it's not going to be, below zero. You're not going to show a loss unless
Right.
something else is happening. If you had like a major vol expansion, that could be the case. But for whatever reason, it's showing down here by now, but the principle is the same. As the volatility goes up in your expiration cycle, that will suppress your profit potential. And as it goes down, then it comes up. So I'm clicking to make lower implied volatilities right now, and you can
Mhm.
see that all other things being equal, your profit potential is greater.
Right. Okay.
And the other detriment to the iron condor is if, you had a price target around 230, but if it goes up here even further,
Mhm.
then you have the potential to take a loss. So if you wanted to get rid of that, you could do something like a jade lizard, which is more neutral to bullish, but has no loss on the upside, doesn't have any risk on the upside. So to do that, you would remove that leg, and you would have to narrow this spread right here. So this is a jade lizard, and you can see if you blow through there, you still get a very tiny profit up here above 235. The problem with the jade lizard is, of course, it uses dramatically more buying power
Mhm.
because it is undefined risk on one side. Now, if you were to make it even a little bit narrower, then you could take 90 cents here and go down here and buy some kind of a wing. Like let's say you bought the 205, and that would cut your profit, or excuse me, your buying power requirement by quite a lot. You'd still have profit up here, but you'd have a max loss on the downside instead of undefined risk. So those are some short premium strategies you could consider.
Okay.
The next one we were going to look at is a debit spread. We're going to be using calls since we are bullish. Now, a debit spread is not a neutral strategy. It is a bullish strategy. You need to get your move in order to make the money. So to set it up, you purchase an in-the-money call and you sell an out-of-the-money call against it to reduce your cost basis. Then I like to make sure that it's a 1-to-1 ratio. So you can, oops, I haven't got this at the money. Let's move it down. Here we go. So you can see here's your max profit and your max loss, and you can use these arrows here to move this around so it gets very close to being a 1-to-1 profit loss ratio. And this is what this looks like over on the risk graph. So what we want is a low buying power effect, and that is a benefit of the call debit spread. You can see we're only using about $500, which is also our max loss. Now, you can see this orange line. If you do get a move quickly, then you will make money faster than you would with an iron condor, because we're not having to wait so much for theta decay, although there is some theta in at least both of those options. So you make more money more quickly than the iron condor, and there is no risk at all to the upside. So that is another benefit of the call debit spread. However, your profit potential is capped at the difference between the width of the spread and the debit that you paid for it. There's no room to the downside. As I mentioned, you have to get a correct directional move in order to make money. And as far as volatility, what we were talking about before, this option, the long option, will benefit by an expansion in volatility, but that one, the short call, will a vol expansion will be detrimental to it. And since you're wrapped right around the money, it kind of equalizes. So it really doesn't have very much of a Vega effect. What else did I want to say about this? So you can compare this, if you just take this off, you can compare this to the long call. You still have to cover this zone right here before you start to make money. But if you get your correct directional move right away, this orange line is telling you that you can even make more money than you can at expiration. As we click through the dates here, you can see that that line actually comes down until you're making less. So a fast move is actually beneficial with a long call, but you do have this zone that you have to cover if you don't get that move quickly. And let's say you move up, but you only move up to, let's say, 224, you're still going to show a loss. And if you want to get rid of that problem, then you can use the zebra. And let's use, Matt wanted to use the 14-day at one of these. So let's go. First thing I do when I set up a zebra, again, we're using calls because it's a bullish hypothesis, also not neutral. You have to get your move to make money. So the extrinsic value in this at the money call is $400. So let's go up here to half that, because we're going to buy a call and then we're going to make it 2. So we're buying 2 calls and then we're selling this at the money call in order to cut out all of that extrinsic value. So here is the debit that you're required to pay. So that is quite a bit more than the call spread, and it is also more than just a long call. But you also have, why isn't it showing up? Let's go and look here. Why are we not showing the zone? I don't know. Oh, wait, I think I know why. Excuse me. Let me set this back up. Sorry, just give me one moment. There. All right, I was on the wrong date. I had left it on the 25th. So now we are set up correctly, and you can see that this is similar in shape to just a plain long call, but you don't have a zone to cover. If you get any kind of move up, you will be profitable, and your profit potential at each of these points along the graph is greater than with a long call. So the downside of that, again, is that you have to pay a greater debit than you would with a simple long call. Which one do you like, Matt?
Wow, they're all interesting. I think that it depends on your capacity of wanting to be fixed to the screen, right? Because if you're trying to time a move and you're someone who's away from the desk more than you're at the desk, unless you're setting up, automated entries and exits, then I think the skewed iron condor might be interesting. You could also, buy a few shares of IWM or TNA if you wanted to give yourself a little extra long side bias. But if you didn't have the capacity to be at the desk, I think that one, or I like the zebra that you showed here.
Yeah, this
because
is the zebra. It gives you almost 100 deltas. That would be like this is like buying 95 shares of IWM, which would
right.
cost you $21,000 if you were
Yeah.
just to buy those shares outright. And here you're only spending
I mean,
1,300
that's
and
amazing,
change.
right? In
Yeah.
terms of how you can really maximize your capital. But the analysis on IWM right now is, it's really choppy at this point. And what I'd like to see for that to change, if we got above the high from yesterday, that could trigger a move in the short term to get up to the first target, which is around 225. And then if we're looking at the MDY cycle, and this was to have a right-hand translation, that would mean, and I'll just show my screen real quick, and then Katie, if you want to jump back at all for whatever reason on the Tasty Works, Tasty Trade, you can see where we are right now. And if we're going to form a right-hand translation, and I look at how much time that would be from where we are right now, let's just say it was a very strong right-hand translation, you can see it's about 18, 21 days before the minor cycles, the minor cycle, that third, starts to roll over. So that's why that's why cycle analysis just gives us this awesome framework to really trade plan off of, and so many different layers of work that you can do to help with your planning. And that's why that 21-day makes sense if this was to translate bullishly, even if it chopped around for a while and finally got up to about 227, 227.50. All of these strategies would likely work out. Is that correct, Katie?
Um, yes, it could work out. If we just continued higher like that, we would probably,
Well, if it
see
chopped
similar.
around, then let's just say it just went sideways, and then it got a
If
move on the
mhm. If it
tail
just
end
went
of it.
sideways and then you got your move towards
Mm-hmm.
the end,
Yep.
yes, your iron condor would be profitable as long as you didn't get too big of a move. If you I, I I guess I wouldn't do the long call because you really
Sure.
want a quick move
Right.
to in your direction if you just purchase a long call. You would still be profitable, but I prefer to see those have a quick move. The debit spread, of course, would be
Mm-hmm.
profitable as well, and also the zebra.
Right. And that debit spread, as we've talked about before too, if you did get a pullback first and it didn't negate the overall more positive situation that it has at the moment, you could use as an opportunity maybe to let go of that leg if you saw
Hmm.
something change. I mean, that just gives you a little bit of flexibility there. And I really like the zebra in terms of how the minimum capital that you would have to deploy relative to buying the stock outright. That's quite interesting.
Yeah, that's very interesting. And it also has the benefit over the long haul of you don't have a gap to cover in order to, if you don't get your
Very
move right
true.
away with the long call, you have
Yep.
that gap to cover
It's
where you're
yep.
going to not be profitable if you don't cover that, whereas that's not the case with the zebra.
Yeah, that hurdle's removed. Now, just to finish it off, let's look at that zebra, Katie, and let's go out instead of 2 weeks, 3 weeks. I just want to see what the key differences
Okay,
are, and then we'll
sure.
wrap it up.
All right, let me take that back. Can you see the zebra?
Yes.
Okay, great. So all we have to do is click to the next expiration cycle. Boom.
Oh, cool. So what happens, the biggest change is what? The buying power effect?
Yes, well, I don't know why it's showing that. It should be the debit paid.
Oh, okay.
So it looks like there's something glitching out. I have a lot of different strategies set up here, and so it
Sure.
might be accumulating them. But this is what you would have to pay,
Oh,
$1,238.
so really that didn't really change much.
Not
So what
much,
what do you
no.
see as the better play in terms of, since if you have a 2 to 3 week outlook, would you look at the 2 week versus the 3 week expiration? How would you make the decision on which one to pick if you're doing the zebra?
I think that because if you're doing the zebra and you get a correct directional move, even immediately, you can take it off. You know, if you hit your price target, let's say you have a price target of 225, then it's not going to matter. If you don't get your move right away, let's say you're past the 14-day mark, if you've done a 14-day contract, well, you're going to have to close it either for a scratch, or, you know, if you're still right here with nothing having changed, you would close it for a scratch, or if it went, you know, down small, you'd have a small loss. So in that way, more time, I guess, is always better if this is the strategy that you're going to do.
Got it. Excellent. That was really great work there, Katie. Appreciate it.
Sure.
All right. Well, unless there's any other questions, let's see here.
There are some questions in the
there are
chat.
some questions. Yep. Yeah. Do you have ARC by chance, Katie? Because I don't have that one updated. It's ARC came in. Let's see what else came in. Bitcoin came in, which I can do.
Okay.
Yeah, I do have ARC. I just want to address, there was a couple of chats about what we were just discussing. Bruce was asking, don't we have low vol now? And yes, we do. And so when you get a pop in vol, that's usually accompanied by a, you know, a down move. So so that would be detrimental to these in both direction and vol if you had, for example, the iron condor. Walter, as we are moving towards a trough, is it not taking too much risk to bet on lower volatility? I wouldn't take that right now. And that is something that you certainly would have to consider. If you know, we look at these daily and weekly cycle timing windows, and, you know, if you're, you know, trying to suggest that you're going to have a contraction in volatility, as I just said, an implied volatility expansion usually does accompany the down moves. So yeah, perhaps, you know, if it was me too, I would probably wait until we get the down move, and then as we're moving, and depending on how much of a retracement we get, I would probably wait and then place these kind of long premium bullish trades at that time as we're getting the move back up. Iron Condor is more flexible because you have room to the downside.
Right.
Okay, so now let's see, ARC. Let me go to my screen. And let's go to, this is the weekly chart right here. Okay, we've got a 42-bar weekly cycle that's quite long, and it is divided into minor half cycles. That minor cycle trough is due in the September-October timeframe. We have gotten up to actually bounced off that major 38.2% fib, but we still do have positive momentum, just a slight curling over. I would expect some kind of perhaps a small retracement into this minor cycle trough. Not really able to predict how steep that might be, but this is holding up very nicely. And then over in the second half of the cycle, I've got this projected. There was a monthly extension here up to a major 50% fib. We could even go and take a look at that monthly chart. So we're early in the rising phase on the monthly, and we've got a 127.2% extension level up here at 82.67, and 94.66 is the one above that. And we don't have a timing window on the monthly due until April of 2026 through September of 2026. So this is holding up nicely. This cycle is due to trough in March of 2026. So that is getting pretty late in the weekly cycle. March is just here, so maybe it doesn't show that much strength out in the second half of the cycle. We'll just have to wait and see. And then the daily is here, and you can see that we just recently got a retracement down below the support zone here. And, you know, that could be a slightly early minor cycle trough here. This is a 58-bar cycle, quite long. So maybe this is a slightly early minor cycle trough, a move up, or it could come back down as the rest of the market when we get that retracement. But then later in the cycle, I would expect this to be able to move back up to this level, major 38.2% fib, right around $79. And I think that was all I had, right, Arby?
Yep.
Okay.
Great job. All right, let's pop over to the VIX. I think this is an interesting one. So we had, 1 week up that was quite sharp, and so far it hasn't done anything since that point. So, well, we just have to watch to see if we can end up forming that higher low and then curl its way back up, just like it did back here, just like it did back here and back here, and we can even go further back. That's often how this ends up trading, right? It ends up going, it ends up just moving down slowly and then starting to work its way back up over time, right? So that may be what is happening right now. We'll just have to wait and see. There's also that, clear low due, but it hasn't done anything yet. So we just have to wait and see if this can actually form that higher low versus that low and then curl up. But as right now, it's not really acting very well. Jump over to the next one. I'm just blanking on it. Just gotta unfortunately
Boyle.
pick up not Boyle. It was Boyle's
SOXL?
that not SOXL. It was
Bitcoin.
Bitcoin. Thank you, Bitcoin.
Oh,
Yeah.
It's amazing when you get a cold, all of a sudden your brain goes into a fog. So
okay.
there's a low here that is due right about now. So we'll be watching to see how this acts. Overall action is super strong. So that says this old high is likely to be moved up and out, let's just say, on the upside once we get into that next move higher. And on the short term, you can see there is a low due shortly here. Going to be watching this to be a lower high and then curl its way back down one more time and then get that move back through the old swing high as we get out into the fall. All right, so that's our look there at /BTC. And I didn't really see anything else that I could cover, Katie. I don't know
No,
about you,
I don't.
Matt.
Those other two
How
that
about you?
Olga mentioned, Boyle and SOXL, I do not have those.
Yeah. All right, Matt.
All
Back to you,
right.
sir.
Okay, very good. All right, well, that is this week's trade planning live session. We thank everybody for joining us, your participation, your questions. And just a final reminder that we have 1 week left in the level 4 special. So if you're interested in upgrading or taking a level 4 membership with Ask Slim, you can do that. Go to the website and you can click on the upper right-hand corner, or you can reach out to me and I can help you get started with that. Otherwise, everyone have a great weekend. Again, appreciate your participation and great trading.